Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 416 on February the 28th, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on the 2X Long VIX Futures ETF, SELLAS Life Sciences Group, First Majestic Silver Corporation, and BitMine Immersion Technologies. And we discuss 4 new trades on Fermi Inc, the GraniteShares 2X Long COIN Daily ETF, Petro Brasileiro, and the iShares Silver Trust ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And as a heads up, I'm doing my best to record the show somewhat quietly because I'm skiing this weekend with some good friends. So I didn't want to let you guys down by not producing a show, but I'm also trying to be a good housemate. We have a house in Colorado, so let's dive in. So the equity markets finished a tough month, the month of February, with the S&P finishing the month lower. The Dow Jones Industrial Average lost 648 points this week, closing on Friday at 48,977 points. The S&P 500 index lost 30 points on the week, ending the week at 6,878 points. Now it's time for the topic of the week, and this one's going to be a fairly short topic. The topic of the week is learning versus sourcing. And what I mean by sourcing is finding another way to get an answer. There's so many ways to get answers these days. I've seen kids use apps on their phone to cheat on math tests. The problem is they're not learning. Artificial intelligence has taken the globe by storm, and I am actively using it daily in so many ways. It's increased my efficiency and allowed me to create things that previously would not have been possible without extensive training. There are several experts that are also warning against allowing artificial intelligence to make you dumber. They suggest that you should instruct the AI to teach you to do things with a tutorial rather than simply giving you the answer. It's making us dumber because people are just using AI to do things without learning, and you can use the technology to learn. It's an interesting world when you can learn things that used to be reserved for only the most elite minds in the most elite institutions in the world, but we can learn it with a computer. I found the best way to truly get better is to do both. So get the answer or solution that's needed to solve that moment's challenge, while also going back and taking the time to learn how to do it using AI. So keep learning, keep improving. Now, let's get into the review of last week's trades. We're going to start off with the covered call. We looked at the 2X Long VIX Futures ETF, symbol U as in uniform, V as in Victor, I as in India, X as in X-ray. At the time, the stock was trading for $6.08 per share. I looked at buying stock and selling the March 7 call at 75 cents, hoping for a return of 27.47% in 4 weeks. Well, shares of UVIX grew 20 cents, ending the week at $6.28 per share. The call option that we sold also grew 10 cents, leaving us with a net gain of 10 cents if we were to close the trade out immediately. Now, with stock going higher, this trade is doing exactly what we would like it to do. I want the stock to increase because I own the stock, but I also want that call to depreciate to nothing because I sold it. So I would love for this stock to increase in value over the next 3 weeks, but to expire below the value, the strike price of that call option. That would actually allow me to turn around and Well, first off, I'd keep the premium for selling the option, the premium I collected when I sold the option, and I get to keep my stock, which would mean that I can go ahead and increase my return by selling another call option against the shares next month. So that's the stuff dreams are made of when it comes to covered calls. No adjustments are needed on this trade at this point. Next, we have the cash secured put on SELLAS Life Sciences Group, Inc., symbol S as in Sierra, L as in Lima, S as in Sierra. At the time, the stock was trading for $4.15 per share. I looked at just selling the March 4 put at 40 cents. That could create a return of 10% in 4 weeks. Well, shares of SLS grew 79 cents, ending the week at $4.94 per share. The out-of-the-money put that we sold is still out of the money, and the stock is moving in our favor, and that put is starting to decline in value, which is what we want. We still have 3 weeks left on this trade for the put to fully depreciate down to nothing. If it goes down enough, you can buy it back for a profit, or you can hold it until expiration in hopes of keeping the entire premium you collected. Next, we have the credit spread on First Majestic Silver Corporation, symbol A as in Alpha, G as in Golf. At the time, the stock was trading for $27.56 per share. I looked at selling the March 26-25 put spread at 34 cents. That could create a maximum possible loss of 66 cents per spread. Well, shares of First Majestic jumped $4.43 per share. It's crazy, ending the week at $31.99 per share. The out-of-the-money put spread that we sold is even further out of the money at this point. Our goal, of course, for this trade is for it to expire out of the money so that we can keep the entire premium that we collected for selling it as our profit. So far, this is working out as planned. No adjustments are needed. And then we have our debit spread, which did not work out the way I wanted last week. Debit spreads on BitMine Immersion Technologies, symbol B as in Bravo, M as in Mike, N as in November, R as in Romeo. At the time, the stock was trading for $20.13 per share. I looked at buying the March 19-20 call spread for 66 cents. That could give us a maximum gain of 34 cents or a return of 51.52% in 4 weeks. Well, shares of BitMine Immersion lost $1.13, ending the week at $19 per share. The in-the-money call spread that we bought is now slightly out of the money. The stock, or it's really at the money, the stock price is 66 cents below our break-even point, which means we are justified in making an adjustment. And even if you were to look at just the intrinsic value, when we had a full dollar of not a full dollar, we had 34 cents of intrinsic value when we bought this spread, and because the stock price ended the week at $19, which is our long strike, we actually have zero intrinsic value. So this trade has definitely gone against us. Now, I could change the spread from a debit spread to a credit spread, but the adjustment would actually leave me at more risk for a greater dollar loss, even after turning it into an iron condor. Like I could turn this into a short call spread and then turn around and sell a put spread against it. I would actually be exposed financially more than what I currently have on with buying the spread. So for that reason, my best option right now is either to sell the spread at a loss of 17 cents if I don't believe it's going to move forward, or to just wait a bit longer to see if the stock will continue lower or if it's going to bounce higher again. I'm still trying to learn patience, you guys, so I'm going to hold out a little bit, but sometimes patience is the best answer. At other points, it's just, hey, take the loss and move on. So you just kind of have to weigh out where you see this stock going in the future and kind of your own personality. Because sometimes my personality likes a quick answer, and the quick answer isn't always the best. So that's it for the review of last week's trades. Let's get into the new trades for this week. All trades on today's show will use the March 20th expiration date for monthly options in the month of March. We're going to start off with a covered call on Fermi Inc., symbol F as in Foxtrot, R as in Romeo, M as in Mike, I as in India. The stock ended the week at $9.96 per share. I'm looking at buying stock and selling the March 10 half call at $1.10, hoping for a return of 16.47% in 3 weeks. Now you enter this trade by buying stock for $9.96 and selling the March 10 half call at $1.10. This trade makes the most money if stock prices finish above $10.50 per share. The break-even price on this trade is $8.86 per share. In real terms, the stock purchase will require $996 and you'll collect $110 for selling the option. Next up, we have the cash secured put. I'm looking at GraniteShares 2X Long COIN Daily ETF, symbol C as in Charlie, O as in Oscar, N as in November, L as in Lima. The stock ended the week at $7.62 per share. I'm looking at just selling the March 7 half put at 85 cents, hoping for a return of 11.33% in 3 weeks. Now, you enter this trade by selling the March 7 half put at 85 cents. This trade makes the most money if stock prices finish above $7.50 per share. The break-even price is $6.65 per share. In real terms, you'll collect $85 for selling the put option, and you'll have $750 locked up in case you need to purchase the stock. Next, we have a credit spread on Petro Brasileiro, symbol P as in Papa, B as in Bravo, R as in Romeo. Stock ended the week at $16.62 per share. I'm looking at selling the March 16 half 16 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the March 16 half put at 51 cents and concurrently buying the March 16 put for 35 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $16.50 per share. The break-even price on this trade is $16.34 per share. In real terms, you'll receive $16 per spread and have $34 at risk. And our final trade on today's show is a debit spread on the iShares Silver Trust ETF, symbol S as in Sierra, L as in Lima, V as in Victor. The stock finished the week at $85 per share, and I'm looking at buying the March 85 call spread for 65 cents. That could give us a maximum return of 35 cents, or that's 53.85% return in 3 weeks. Now you enter this trade by buying the March 84 call for $7.20 and concurrently selling the March 85 call at $6.55. This is a debit spread because we're buying the spread. This trade makes the most money if stock prices expire above $85 per share. The break-even price on this trade is $84.65 per share. In real terms, you'll pay $65 to enter the spread, and your maximum gain is $35 per spread. So that's it for this week's show. Thank you guys for following along with me. Sorry for having my voice try to be a little more quiet because people are still asleep in the house. But hey, I'm on a ski weekend, but I wanted to make sure I recorded the show for you guys. So have a great day. I hope you have a wonderful weekend. And as always, happy trading.
Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.